In trading, price tells a story each week. If you can decipher this story, you will have success. As traders, however, we tend to overcomplicate things when actually you only need 5 minutes and one strategy for a simple and consistent analysis. So stick around for these 5 minutes to find out what's the story for next week. Looking at the weekly chart of the S&P 500 here and throwing on our weekly levels, we can see that last week's story already started on Monday. Let's switch to the daily so I can show you why. Now let's add our weekly boxes to make sense of it all. Looking at the daily chart here, we can see that on Monday, after an aggressive move up starting on Thursday already, we hit what? Our weekly fair value gap and our weekly bearish target box, and therefore started to sell off. Zooming back out to the weekly, where does that then leave us now for the next week? We have rejected at around $4,080 and made all our way down here to another weekly fair value gap starting at around $3,895. As we couldn't reclaim this weekly higher low level nor find support within our weekly target box, we can get rid of these two. For me, the price action in the early days of next week will be crucial. Why? First of all, we are within this weekly fair value gap, and secondly, the weekly higher low at around $3,860 marks the swing point that can keep this overall medium-term weekly uptrend in play. To the upside, we now want to look for potential retracement boxes, bearish target boxes, so to speak, and we can identify a first one starting at around $3,990. So let's zoom in a little bit more and mark this one out. Also, we can of course adjust our fibs, taking them from the high up here, and then see that this target box, if what it was interacted again with, would come down to around $4,050. With that, the key levels for next week's price action are set. Let's go down to the daily again to get a better feeling for it and identify potential setups. Adjusting our fibs here on the daily chart, taking it from this high down to our current low, and throwing on our daily boxes. I think we can see two things. First of all, this bearish target box can move down to around $4,057, and therefore again lines up very nicely with this weekly target box. And secondly, if we take our last leg up, we realize that our daily target box lines up perfectly, nearly perfectly, with our weekly target box at around starting at around $3,933, going up to around $4,019. Also, we realized that this daily fair value gap was interacted with, however, couldn't give us any support, so basically it is burned, I would say. Nonetheless, we still haven't interacted with the level starting at around 4,100, so at some point in the future this certainly will be interacted again with. However, we next week mainly want to focus on this fair value gap that hasn't been filled in yet completely on the daily chart. Should we get a bounce, we then have first of all this weekly target box lining up, secondly with our daily fair value gap. This certainly should pose some point of resistance. However, looking at these bearish levels, don't forget, after our aggressive down move over last week, we are now within a daily target box again, and this hasn't been broken to the downside yet. So we want to monitor price action on the lower time frames here. Finally, before we go down to the 4-hour and 1-hour time frame to find real setups, let's add our daily levels, and we see that not only we are within a daily target box and at the edges of a weekly fair value gap, we also find a lot of daily liquidity. It has been taken. Now the question obviously will be, is this enough for a potential move up? And finally, here you can see that I called the level at around $3,800, the daily trend last stand. Let me quickly put that into perspective and explain why. Since our lowest point at around $3,500 occurring on October the 13th, we had this aggressive move up, and this bigger daily uptrend is still intact until we break 3,805 roughly on a closing basis. So let's keep that in mind, especially as this level is also lining up with another weekly target box. If you like my approach to marking out key levels on the chart, please subscribe, guys. It would mean a lot to me and support the channel. Thanks a lot. So let's sum up our price action story here and define actionable setups for next week. For that, we go down to our execution time frame, at least the 4-hour. We are in an area of support here nonetheless until we don't at least break our last lower high at around 3,942 on the 4-hour chart. Everything you do is just the gamble, but not trading. Should we break this level, however, the play is quite simple. First of all, we may either make it up here to our resistance area and then find some reason to go short. And then secondly, if we come back again, we need to identify, is there a reason for us to go long for a potential further move up into the area of around 4,020, 4,050 to sweep these highs. So option 1, in line with the higher term time frame, look for a short setup at around $4,000 to $4,020, or option 2, if we come down here and we can find support again, having, for example, displaced up here and created a fair value gap, take the long into 4,050 first of all to sweep these highs. However, don't forget, this move up will then be counter trend. Zooming out to the daily again and summing up what we've learned for potential moves next week, we realize that we are bearish, at least in the medium term. So let price come up into your resistance levels if you want to trade the daily time frame or higher for a potential further move down. Or if you have the possibilities to trade the lower time frames, at least wait for a market structure break here on the 4-hour time frame before you consider taking price higher. Tell me in the comments, guys, how do you analyze the charts? How do you identify key levels in the charts? And with that, I hope you have a great start into the week. Talk to you soon. Bye bye, and thanks for watching.